Hello traders, you're welcome to this video. In this video, we are going to be looking at a simple yet effective 5-minute Forex scalping strategy. Okay, so basically this strategy combines price action techniques with key indicators to help you spot high probability setups and execute quick trades. Okay, now as for our setup, it is a 5-minute strategy, so we are on the 5 minute time frame. Okay, and then as for our indicators, we are going to be using the exponential moving averages and the RSI. Now as for the exponential moving averages, we are going to be using the 9 EMA 1. We're also going to be using the 20 EMA 2. And then finally, we are going to be using the 50 EMA, making it 3 exponential moving averages. And then we're also going to be using the RSI. The RSI, we're going to be using the RSI period 14. Okay, this is it for this strategy. Okay, now, first of all, we have to identify the trend direction with the EMAs, okay? So in a bullish trend, you are going to find the 9 EMA above the 20 EMA, as we can see here, and the 20 EMA above the 50 EMA. In this situation, the market is trending upwards. On the other hand, for a bearish trend, you're going to find the 9 EMA below the 20 EMA and the 20 EMA below the 50 EMA. In this situation, the market is trending downwards. Then as for a flat market, you're going to see the EMAs overlapping or moving sideways like what we have around here. Especially around here, we can see that the moving averages were just overlapping each other and moving sideways. Okay, you might want to avoid trading during this kind of situation as there is no clear trend. Okay, now in a bullish trend, you're going to wait for the price to pull back after you have confirmed the bullish crossover. Then you wait for price to pull back towards the 9 or the 20 EMA as we can see here. And after the price pulls back to the EMA, you can now consider entering a buy. Okay, then in a bearish trend, you can just wait for the price to pull back upwards to the EMAs, the 9 or the 20, and then after that you can consider entering your sell. Okay, the pullback signals a potential entry point, but you have to try to make sure that the continuation is confirmed. The continuation is confirmed. Okay, so that's the reason why we're going to be using the RSI to confirm continuations after the pullbacks. Okay, so now when you have a pullback towards the EMAs, the 9 or the 20, then you can look for RSI divergence. For example, when you have a long trend, a bullish trade in an uptrend, ensure that the RSI is above 30, not oversold. The RSI, for example, around here, we can see that the RSI was above 30, but it was not in the oversold level. Okay, then for a short trade that is in a downtrend, for example, around here, we had a pullback around here, ensure that the RSI is under 70, not in the overbought, and we can see it was under 70. That confirms our trade, right? So now in trending markets, the RSI is staying above 40 in an uptrend. Let's go back to an uptrend. In a trending market, when the RSI is above 40, so we can just consider like half of the 730, between this 30 and 70 levels. You can just look at around half. When the RSI is around like the midpoint, when the RSI is about the midpoint, it it can suggest a strong momentum. Okay, it can suggest a strong momentum. However, when you have the RSI enter into the overbought level, it can show that the bullish momentum is getting weak. Okay, so when you find the RSI in the overbought level, you might want to consider exiting any buy trade that you have. And when you find the RSI in the oversold level, you might want to consider exiting any sell trade you have, especially when you have the price of the assets bouncing off the moving average, especially the 50 moving average. So if you are in a buy trade and you find the RSI entering overbought, you can exit your buy trade, especially when the RSI begins to point downwards. And then, for example, we can see around here After the RSI began to point downwards, you can see that price came back down to this point. But because this is a trending market, if you want to ride the trend, then you can just leave your positions open. However, if you want to scalp, then you can exit your buy once you notice the RSI begin to point downwards, and you wait for a pullback and you enter another buy trade. And when it goes up and you notice RSI pointing downwards, you can exit the buy and wait for a pullback and enter another buy trade. So if you're scalping, you can do it that way. Then the reverse is the case for a sell. Okay. Now, as for setting stop losses, ideal places to set your stop loss are below the previous swing low for a buy trade and above the previous swing high for a sell trade. And then as for your take profits, you can decide to set them at the nearest support or resistance zones. And then you can also confirm your take profit levels using the RSI. For example, when you have a buy trade and you see the RSI entering the overbought level and beginning to point downward, it's a sign to exit your buy. When you are in a sell and the RSI enters the oversold and begin to point upward, it's a sign to exit your sell. Okay. And then you can use opposing signals from the moving averages. For example, you are in a buy trade and you notice a bearish crossover, it's a sign to exit your buy. Or you're in a sell trade and you notice a bullish crossover, it's a sign to exit your sell trade. Okay, now some tips for success include avoid trading in a flat or choppy market. Okay, when you have a choppy market, for example, something happening around here, you might want to avoid trading because the direction of the trend is not clear. Okay, and you might want to stick to pairs with low spreads. For example, you can see that we are on the Euro USD chart. It's one of the most traded pairs in the market. So you can stick to pairs that have lower spreads, especially if you are a scalper. Okay, and then monitor news releases, as scalping can be risky during major market moving events. Now, by following this strategy, you'll be able to trade confidently and efficiently within short time frames. Remember that this strategy is for the 5 minutes. So you would want to be catching quick price moves, right? You want to catch quick price moves as a scalper, okay? So when you follow this strategy, you can be able to trade confidently. Make sure that you always get your confirmations before you enter a trade, okay? And try to make sure that you do not trade with an amount you cannot afford to lose, okay? And watch out for possible reversals when you are in a buy trade. When you have signs of reversals, you can just exit your buy, wait for another opportunity. When you have a buy continuation, you can then enter another buy. Or you're in a sell and you notice a possible sign of reversal, you can exit the sell, wait for a pullback, and enter another sell. Okay. Now, I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.